Central banks are not hedge funds. They're not day traders. They're not here to buy and sell. They're here to accumulate and then hold for 10 or 15, 20 years at a time.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to today's show on Wealth Strategy Secrets. We've got another great show for you guys today. Today we are joined by Kevin DeMeritt. Kevin is an international business and economic expert with deep experience in financial markets and interest rate change. Kevin started his international banking career at the WFI Corporation. Building upon this experience in his analysis that indicated gold would be a safe haven for investment, in 1997 he founded Lear Capital. Since its founding, Lear Capital has grown to be one of the nation's largest precious metals companies. As an expansion of his professional footprint in the financial management space, in 2008 he co-founded Wilshire Finance Partners, a real estate investment fund. In 1997, Kevin wrote his book, The Bulls, the Bears, and the Bust, reviewed by the Associated Press, which predicted the market crash of 2000 and the ensuing rise of gold as a safe investment. This has led him to being a nationally recognized expert and highly sought-after guest commentator on more than 1,000 podcasts, radio, and TV shows. Kevin, welcome to the show.
Dave, thanks for having me. I appreciate being here.
Yeah, you bet. I know this is going to be a fascinating discussion and really, help the audience, just understand more about precious metals, about gold, and really your investment thesis around that and why, you believe, that now is the time to really have that as part of your portfolio. But before we kick things off, tell us how you really got into gold and how you got into the space.
Yeah, it's an interesting story. Like you said, I worked at WFI Corporation. It was an international banking company based in Beverly Hills. And we established banks across the world for larger companies, mostly for import exportation. So they would issue letters of credit, so on and so forth, tax reasons, all that kind of good stuff. And each one of these banks that we established, we would have to obviously capitalize that bank. And at the time, you didn't have the euro. We had to use French franc or British sovereigns or whatever the sterling or whatever was available in that jurisdiction. And someone came up and said, "Hey, look, why don't we use potentially gold because we have to hedge all these different currencies and it's a real pain in the neck." So they put me in charge of researching the gold as a way to capitalize a portion of the bank and save on hedging costs. And after about 6 to 7 months of researching gold, I said, I think this is my career. I think I want to change and start an investment company in gold because I saw that the governments were printing money like crazy and that gold should benefit, long term. And the thesis turned out to be right, and I think continues to be right today.
Yeah, I was just going to say, let's fast forward to today, right? And we've just gone through this historic amount of money printing and would also like to get, your perspective on really devaluation of the dollar, right? And really a kind of understanding that, because I think a lot of people don't really look at that in that light. They just keep saying, hey, well, the price, the value of my single family home is really going up. Right. They're just kind of looking at it through that lens. So tell us a little bit about, how you're viewing, the effects of all the printing that's gone on since the pandemic and kind of where we are today.
Well, I think it even started further back than that, Dave. You go back to Alan Greenspan when the dot-com situation happened. That was really the first quantitative easing that we saw. That was the first time someone printed up that kind of money to try to get us through a recession. And in 2008, they just took his playbook and said, well, let's double or triple this thing and really start printing money and get this economy back on track. And then the pandemic hit and they continued that. And it doesn't look like it's going to stop. We have $1.5 trillion deficits as far as the eye can see. So as you start to see the value of the currency continue to fall, which is real easy to look at because each dollar they print makes the current dollar out there worth a little bit less. So that's why we have the inflation. That's why the interest rates are up. And that's why you're probably going to see long-term precious metals and other hard assets like real estate continue to expand because it's impossible for them to stop printing money at this point. Absolutely impossible. Mathematically impossible for them to stop printing money.
Yeah, for sure. It's just been such a continued. You're right. I mean, 2008, but it really started even once we came off of the gold standard, right, in 1971, and this consumer-driven economy that we live in is just, as Robert Kiyosaki likes to talk about, it's all fake, right? I mean, everything
Right.
is kind of, built on this fake model. So it's kind of interesting, right, to take then precious metals and say, okay, how has that really evolved, your investment thesis? So we talk a lot about really wealth strategy, right? And creating an overall strategy, within private equity, within hard assets, things that are non-correlated to the markets. Certainly precious metals kind of has a space, but what do you think in terms of, do you have a personal wealth strategy for yourself? Do you have a particular investment thesis, especially since you've been in this space for so long now?
Yeah, my investment thesis is that the government is going to continue to print money at a faster and faster pace. And if that's your thesis, then what are the investments that are going to benefit from that? It's going to be precious metals, it's going to be real estate, it's going to be art, it's going to be tangible assets that over the next, in my opinion, 10 or 15 years should get much more expensive than where they are today because the value of the dollar is going to continue to fall. So if you believe that the government's going to stop printing money, then my thesis, you can throw it out the door. However, most people are, flabbergasted to find out that if you took the value of gold in the year 2000 and the value of the stock market in the year 2000, gold has outproduced the stock market. So if you took a diversification strategy, $100,000 invested in 2000 in the Dow Jones would be worth about $325,000 today, but $80,000 invested in the stock market at 20% or $20,000 in precious metals, that portfolio stands at $385,000. You have $60,000 more in your portfolio today than you did just having the stock market. Most people wouldn't believe it, but go look at the charts, go look at the values. That's what money printing is doing. It's causing hard assets like precious metals and real estate to skyrocket faster than the productive assets that should be outperforming them. But the government's going to keep printing money, and I believe my thesis will hold up over the next 7 or 10 years.
Yeah. Do you think there is some type of tipping point? I mean, I know a lot of folks really kind of talk about that, where we've just printed too much, right? And we start to become a bit more like Japan.
Yeah, I think we're really close to a tipping point, and I think the tipping point is really going to be the U.S. dollar not being the reserve currency sometime in the future. Could be 5 years from now, could be 7 years from now. It'll be in my lifetime when the U.S. dollar falls off a cliff and is no longer the world's reserve currency. And BRICS is doing a pretty good job of being a tipping point because you have South Africa, Brazil, Russia, India, and China, which is 40% of the world's population. If you want a tipping point, you have 40% of the world's population looking to create a currency to compete against the US dollar. Why? Because we keep printing more of that dollar than we should. We've weaponized it a couple of different times with Russia and some other countries. And countries just want to have trade. They want it to be solid and secure. And that's why they're talking about backing it with either commodities or a little bit of gold. That, in my opinion, could be a huge tipping point for the U.S. investor and the U.S. people.
Yeah, I know the BRICS have been really growing some steam since then. But do you have in terms of really looking at gold, since it is so different and we're talking about kind of really the dollar is being so fake and so many different data points, I think in the economy these days, you have to kind of look at skeptically. So are there any particular data points or different rationalization that you're taking when you're looking at gold, right? Or, silver, precious metals, with just different metrics around how you actually measure it, right?
Well, I think one of the most predictable measurements has been U.S. debt. So if you took a look at U.S. debt and then the value of gold, there's somewhere around a 95 to 97% correlation to how high the debt is to how high or what the price of gold is. And over time, that's held up very, very consistently. So if our deficit this year is supposed to be 1.5 trillion, our interest payments are around 640 trillion or $640 billion. By 2023, those are expected to be $1.4 trillion in interest payments. And they don't expect the interest rate to be as high as we are today. So if you look into the future with the money printing and the debt that the government has, and then their off-balance sheet debt, Social Security and pensions and Medicare, Medicaid, and things like that, you start adding that in as people retire. I think the debt goes much, much, much higher on balance sheet debt, and the price of gold is going to fall or follow. And you'll also see the value of the dollar start to come down over the next couple of years. That's my thesis. I'm sticking with it. It's worked since the year 2000, and the government just can't stop printing money if they're like dependent on it. I mean, look, put down the shovel, guys. Let's quit digging the hole so deep.
Right. So then, Kevin, what do you think is the biggest risk in investing in precious metals?
Well, the biggest risk to me is if the government stops printing as much money as they have been. But if you believe there's going to be a recession coming, they're just going to start printing even more money again. Even if a recession does not hit, we have $1.5 trillion deficits as far as the eye can see. And it's impossible for them to really stop printing money. So that to me is the biggest key is, does the government balance a budget? The interest rates fall, and you don't need gold any longer, right? You don't need it as a hedge against the volatility that all this debt causes. You don't need it as a hedge against inflation or higher interest rates. So it would probably fall, but I just don't see that happening.
Got it. So part of our investment thesis is we're always looking for, tangible assets that have tax efficiency, have passive income, and some type of forced appreciation. So, where does gold really kind of fit into, from a portfolio allocation standpoint? What are you looking at? What is the job that you're looking at for gold or silver? How much in terms of, percentage of your portfolio is good that you recommend to clients to have in there? And again, like what is the job that you're looking for?
Well, I think the job is twofold. One, you brought up forced appreciation. If the government's going to keep printing, then the value of gold is going to increase in value. When you brought up 1971, when we went off the gold standard, you have a choice. I can take these paper dollars or I could take the gold. Everybody wished they would have taken the gold at $50 an ounce. It's, almost 2,000. It's $1,920 today. So it's had a tremendous run since we came off the gold standard. If they keep printing money, then that forced appreciation, in my opinion, is that money is going to find its way over to tangible assets, not just precious metals, but real estate. Like I said, it could be art and other tangible type assets. Personally, I have 30% of my portfolio in precious metals, but I'm in the business, so it's easier for me than it would be for someone else. But, depending on your situation, if you're looking for income, obviously gold's not going to give that. So you might have a lower percentage of gold just as a protection against a fall off in the stock market or an economic recession that we may have around the corner. So your percentages may be lower. And so we would need to sit down and have a conversation with someone and find out where they are and what they're really looking to do to kind of try to give you an exact percentage. In our opinion, that would be most beneficial.
Yeah, fair enough. And what is the best place for people to, acquire? What is your model at Lear to, for people to really purchase gold? Do you have physical vaults? In what countries are they based in? What does the security look like? What does access look like? How does that all work?
Yeah, that's a great question. I mean, most of the time, Dave, we physically deliver the metal if it's a home delivery type situation. So I would say about 80% of the time, people actually want to hold the metal. They don't want it in an exchange traded fund, at least the people who are calling us. They actually want it physically there, right? So we would deliver it. We also use a company called the WFI Corporation. It's one of the largest depositories in the country. A lot of the IRA companies also use them. The government uses them. It's used on COMEX to hold all the COMEX physical metals. So very accessible, and you can take physical possession out of that depository anytime you'd like. We also work with a lot of IRAs and pension plans. So people are looking to move a portion of their IRA or pension over to a self-directed IRA. We work with a lot of those people. And again, if you wanted to take physical possession, you're able to take physical possession at that particular point. We really don't have storage outside of the United States. I know a lot of other people do. I really don't like it, just in case some third-party risk is just too far away. It's like owning a piece of real estate. I kind of want to own it as close as I possibly can to me. And I feel the same way about the depositories.
Yeah, I've been reading that this year there's been such a mass movement for countries, sovereign wealth funds, basically bringing back their gold into their own, possession, into their own country, right? Even the Vatican. I forget the amount that they actually have that's out there, but they brought it right back. That's in their purview under their own physical security. And I think that's been a big movement for the past 12 months. Do you have any statistics on that?
Yeah, I don't have statistics on it because it's very hard to follow what these countries are actually doing. But yes, in the news, England wanted their gold back. Germany wanted their gold back out of the, Fed Reserve, Fort Knox. So I think people are coming to the same conclusion. I want to hold my wealth in my hand. But on top of that, Dave, just recently, or at the end of last year and throughout this year, central banks have accumulated more gold last year and continuing this year than they have for the past 50 years. So central banks are not hedge funds. They're not day traders. They're not here to buy and sell. They're here to accumulate and then hold for 10 or 15, 20 years at a time. If they're accumulating at the fastest pace since the year 1970, if I were an investor, I'd be looking at that. Because if you look back in history, when they're sellers, the price drops. For instance, in 1999 to 2000, they were sellers and the price of gold got down to $275 an ounce. And now they're buyers again. So if I had to guess, the price is going to go much higher. They have more money than anybody, any kind of institution does. They can print money and go buy gold. So that's a pretty good way to accumulate some wealth. So long term, I think it's not only the countries looking for their gold back, but they're accumulating more.
Yeah, I think it's extremely telling, right? And this is countries all over the world that are doing this, and like you said, central banks and everything are making these kind of moves. So investors should be aware of these kind of moves, right? And then bring that into your own kind of strategy. Try to make some sense of it, right?
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Yeah, hey, I'm not smart enough to be a stockbroker, so I couldn't give too much, or too much of a recommendation on stocks. But gold is supply and demand, right? That's it. If there's more demand than supply, you're going to get higher prices. That's why when the government's printing money, if you put an increased demand on a fixed supply, basically a fixed supply, the price is going to go up. And that's my thesis, and that's what I think is going to continue to happen. And central banks are now piling on that same thesis. With everybody printing money. So I think it's going to be, like I said, over the next 7 to 10 years, a pretty good run for investors in precious metals and other tangible assets.
Yeah, let's talk about the supply a little bit of gold, right? I mean, what nations is it primarily being mined out of? Have there been any technological advancements that, mining extraction has become, more efficient to get out? Or are we going to still continue to have the scarcity and limited supply that's out there?
Yeah, that's a great question. So if you go back to South Africa, which was the world's largest supplier of gold, all of the technology in the world has only been able to keep up with about a 2% increase in supply per year. So they have to just go deeper and deeper and deeper into ground. So more technology is just going to kind of keep you about the same supply that we've seen year after year after year. They've made no great discoveries. Most of the countries, China, Russia, have a very difficult time mining their gold, and it's very low grade gold. So we're just not seeing a big surge in supply that you would think you would see with all the technology and gigantic trucks compared to what we had 30, 40 years ago. So about the same, quite frankly.
Yeah, it's interesting because it does seem like that there should be some advancements, in that domain there, right? That we can drive up efficiency. You can extract more, but like you say, if it's only gone up 2%, the chances in the next decade of it, surpassing that are probably nominal.
Yeah, just deeper into the ground and a lot more government regulation all around the world. So it's hard to combat those two things with technology. You're just not going to get anywhere unless they find something at the bottom of the ocean or on another planet. I think we're probably in that 2% range at the very most.
Yeah. So look, I know you're not an economist, Kevin, but you obviously follow this really closely. So if you had your crystal ball, over the next, 5 to 10 years, where do you see the prices of gold? I mean, we're hovering around 1950 or so right now, an ounce. What are your projections telling you?
It may sound crazy, but I'll give you a projection that I made all the way back in the year 2000. Silver was trading about $3.75 an ounce, and I said it would be $12 an ounce, and people thought it was absolutely crazy. About $8, people thought, well, maybe I'm onto something, and then it just surpassed it. I think the price of gold will be $3,500 in the next 5 years. If you look at the debt around the world and the money printing, and the supply becoming available and the central bank purchasing, I think gold has a very good shot at $3,500 plus per ounce.
Interesting. And, from a gold, when you actually purchase gold, are there any fees in term, like let's say I was to buy 10 ounces of gold, right? How is it structured? Do you have fees to, if you are housing it, if in terms of the transaction and things like that, how does that work?
Yeah, that's a great question. So each type of gold, the coins, the bars, are they limited, so on and so forth, have different fees. Each one of them, when we conduct a transaction, is explained exactly what the fee is for that particular coin, or bar. So it's right on your invoice. It's on a recorded confirmation line. It's also on a contract. And it just really depends on exactly which type of metal you're purchasing. If you're purchasing the rare type coins, obviously a higher fee for those because they're rare. And American Eagle might be a 1% to 3%, depending on how much you're purchasing. So there's a range, but you're going to know. We actually did something fairly unique last year. We had a 24-hour risk-free purchase guarantee. You actually purchase gold from us, we get you your invoice, and you have 24 hours to cancel it after you've locked in the price or send in the money. So we really want people to understand and have transparency. Here's what it's cost, go out, try to look across the internet and see if you can do better. We're a fairly large company. We think our prices are the best. Yeah.
Let's go back to security for a second. So how is it, if you were to buy, say you bought 20 bars, how do you deliver that? If you're physically delivering that to someone's home, how do you do that?
Yeah, that's a great question. We get that question a lot. Just how the heck are you getting hundreds of thousands of dollars or millions of dollars a day through the mail? So we use Federal Express so that you can watch, the process all the way through. Here, the box left, it's about ready to get to my door. You need to sign for it, and then it's finally yours. But yeah, Federal Express for 99% of everything that we deliver on a daily basis.
Okay, and is that insured? I would imagine it's got some degree of insurance on it.
Yeah, it's insured for the entire value of the package.
Okay,
correct. And then we make it easy for people when they deliver it back. We just email you a Federal Express label. It's our insurance that has a blanket coverage back to us. So within 2 or 3 days, you're back out of the metal, just like you would a stock or any other kind of investment.
Got it. Got it. And so how do you recommend people, once you've taken possession and it's in your house or wherever it is, that's in your purview, do you recommend people, set up a safe or what type of security system, do you recommend?
Yeah, I mean, most people use two different things. They either use a safety deposit box. You can get a fairly large amount of gold in a safety deposit box. Or they have a home safe if it's nice and secure. So I would say that if you have a decent amount of metals that you bolt it to the ground, because there's an incredible amount of stories that I can tell you over the past 30 years where the next door neighbor comes and takes the safe, or the next door neighbor's kid comes and tries to take the safe out. So have it bolted in or in a wall or something like that. But that's the way most people, will store it.
Got it. Yeah, interesting, in terms of security. I know there's a lot of different thoughts on different gold, and there are some facilities I know throughout the country as well that people will actually store, and it's kind of managed in that central location in vaults. Do you guys offer that service as well?
Yeah, we do. Delaware Depository. We also use Brinks. Those are the two that I like the most. So Brinks has different locations: Los Angeles, Utah, back east. So you can get fairly close to where you are, depending on where you are in the country, if you wanted a Brinks location. And then Delaware Depository is in Delaware. And like I said, one of the most secure and largest depositories in the world. So that's what we use for most of our storage. And that's what most of the IRA custodians use as well.
Yeah. Kevin, you mentioned that you had about 30% of your portfolio in gold, silver right now. You also have a real estate investment firm. What is that actually focused on? Which asset class in real estate are you focused on?
Yeah, so it's a lending company, and it's not hard money. It's in between the hard money and the bank lending. So our rates are somewhere between 6.5% to around 9%, mostly in commercial type properties with industrial properties, long-term memory care, things like that. So very, very stable. Went right through. We started in 2008, didn't have a problem. We've never lost an investor, any money at all. Our loan to values are around 65% loan to values, and we're very, very strict on that. So it's strictly lending for a margin of safety in the real estate market, which gives us a pretty good preview of properties that maybe we would want to own personally as well. So, you just see so many different types of properties that you can get a pretty good idea of, what are good values out there, what may be increasing in value. But I like the income aspect of lending on real estate and just, getting a monthly check with a margin of safety.
Yeah, sure. So where is the remainder, just at a high level in terms of your portfolio allocation, that other 70%, which other key buckets are you focused on?
Yeah, so I have 30% in precious metals, I have 40% in real estate, and then the other 30% is in cash and some stock. It's a very, very narrow stock because I only invest in what I understand. And like I said, I'm not great at understanding the stock market. So it's a very small portion, maybe 5% of my portfolio in stock. But that's how I have it right now. I mean, the cash is fairly high because I believe there's going to be a recession and I can take advantage of, some undervalued assets once that happens. So that's kind of what I'm looking for.
Yeah. Excellent. So tell us a little bit, just let's just kind of walk through the steps so we have a clear picture now. I think it was a great background that you've provided of, some of the risks. I mean, how to kind of, manage security of the asset, how it fits into your portfolio. So if someone was to actually, engage and want to, purchase gold or silver from Lear, what are the simple steps that they can take to actually acquire some?
Yeah, the first thing I would say is just get the package of information. A lot of people, it's their first time investing in precious metals, and I really would love everyone to get the education on it first, because then you're going to ask the right questions. You're going to feel much better about, the investment you made. You're going to be able to answer, the questions about, why do you want precious metals and what we're expecting out of precious metals. Get that first. Spend a good week, 2 weeks with the package of information, and then get back to us. We can have a conversation about some of the goals. And then once we understand what your goals really are, is put some recommendations together, and then you choose. Here's a couple of different ideas. Here's one that maybe we think there's going to be a little bit more appreciation. That's going to skew more toward the silver market, because I believe that's a great place for appreciation. Or do you want a little bit more security on the gold side? And then what kind of time frame are you looking for? Is it 10 years, 15 years? If it's a couple of years, then it's all going to be in bullion, something that's going to have an extremely high liquidity value, so on and so forth. So we'll go over that with everyone. And if they're interested in an IRA and moving some over with an IRA, we can get the paperwork out on that. Once that's all done, then they get to choose. And once they choose, we lock in the prices over the phone before we have anyone's check. So we make sure that, here's the price, here's everything. We send out the invoice. You look at the invoice, make sure everything's okay, pricing's right, so on and so forth, and then send your money in. And then we help start tracking that for you with, newsletters, updates, bulletins, and you have your own personal representative that you'll talk to each time you call in.
Excellent. If you could give just one piece of advice to listeners about how they could accelerate their wealth trajectory, what would it be?
Always be learning. Every day I'm trying to study, trying to learn more about, my own market. I've been doing this for 30 years and I learn something new every single day. But don't try to be a jack of everything. Focus in on a couple of investments that you love, you can spend time with, that you're passionate about, and really understand that. Because I think people make investment decisions and then go, geez, why did I do that? Well, you didn't have all the information. So if you have all the information, if you understand it a little bit better, you're going to make better decisions. You're going to buy at the right times, hopefully sell at the right times or somewhere around the right times. And it's just going to work out much, much better. So I would say focus, focus, focus.
Yeah, I love that. A couple key points you made there. Just, never invest in something you don't understand. So getting smarter on this is really key, and continuing to learn. And really that's kind of some of the fascination about investing and looking at some of these asset classes. But I think the investment thesis around, precious metals, gold, silver are very strong. It aligns with, our thesis around having tangible assets and having some allocation in your portfolio to hedge against all of this money printing that's going on in the world, for sure. Kevin, it's really been, a pleasure speaking with you. I think this has been super informative for the guests. I know you've talked about setting up a special link for first-time clients, but if people would like to learn more about you or Lear, what is the best place for them to connect?
They can go to, I think you guys had a link, which was lear.biz/gold. So they can go there and request some information. They can give us a phone call at 800-314-0723, 800-314-0723. And I wanted to do something special on the program because we do want people to kind of, look at this investment and learn. So I'm going to offer a $500 credit for anyone who wants to request information from us. We'll put $500 into your account immediately. And you can use that if you'd like to start an IRA. You can use it for your IRA fees or the delivery and insurance of the precious metals to your home. You can use it for that as well. And it should cover almost all of those expenses. So we'll do that, and hopefully everybody can enjoy that.
All right, guys, I hope you heard that one. Rewind that if you haven't, but Kevin's offering a tremendous offer of $500 to get started. And, with a very reputable precious metals supplier in the country, definitely something worth considering in your portfolio. We will make sure to put all those links in the show notes as well. And feel free to reach out to, Kevin and his company if you've got any questions. But thanks again for joining us, Kevin. It's been a real pleasure and honor to speak with you. And thanks again.
Dave, thank you. Been a pleasure for myself as well.
All right, thanks. Till next week.